Jagannathan Tunuguntla is with us in Delhi. It's time to go on to our stock picks of the week. First up, Jagannathan brings us Sintex Industries. This is the one he recommends we buy this week. Take a look.
Established in 1931, Sintex Industries manufactures plastic and textile products and is best known for its water storage containers that are a part of almost every Indian home. The company now has a global presence in 9 countries across Asia, America, Africa and Europe. The company reported disappointing fourth quarter earnings with sales down over 30% from last year. This decline was triggered by a 54% dip in its monolithic segment and a flat performance from its storage tanks business. The company's management expects the weakness in these segments to continue for the next 2 quarters. Sintex also saw a significant degrowth in its molding business in Europe. Revenues from the segment declined 71% from last year because of the overall slowdown in industrial activity in the Eurozone. The stock of Sintex Industry has fallen over 100 rupees in the last year, but 70% of the analyst community still has a buy recommendation on the counter.
Alright, that was Sintex Industries. The stock has not had a very good year, Jagannathan. Sales were down 30%. Profit after tax, or what we call PAT, was down 46% year on year. Now, at a time when most retail investors are already spooked out by bad markets, you want to convince them to get into a stock like this one? Why?
Recently, after this bad results, the stock got bottomed out around 50. I think somehow I feel that the worst is over. I think the multi-year low is being tested. I think there is a reason to believe that the stock is going to go up. And one more thing is the stock is trading at 7 PE multiple and less than 1 price to book. So valuations are very, very reasonable. In the bad results, 1 or 2 quarters, that will all fine. But considering the format of the program is meant for long term with 2-year kind of origin, I think there is a reason to think that probably the Sintex can be a multi-bagger.
But when you say bad results, do you think they'll be able to overcome the challenges of sales and the challenges of business that they're facing on the ground?
Yeah, I think Sintex, the company has its strong brand. What happens in case of whenever the economy turns back, these kind of core businesses which have been running for decades, I think their brand strength and their existing distribution network and etc. will take care of the next wave. So to that extent, their infrastructure is in place, just that they need a better economic conditions, which expected to happen in the next coming quarters.
I'm going to ask you to weigh in on Sintex at this point. What's your feeling from a retail investor's point of view?
I think there is interest coming back in stocks like this precisely, which are beaten down and where you sense business could look better going ahead. I wouldn't know about 150 because I think that clearly requires patience, as Jagannathan was saying, a couple of years at least. But I think in the near term, at least, people are seeing it rally back to 70, 75 kind of levels, and perhaps, therefore, there would be more interest in stocks like that where you think that there could be momentum and you could get that quick 10-15%.
Alright, so this is obviously a stock that requires patience and a strong stomach because it's going to take some time before we see those levels come back on that stock. First pick of the week was Sintex Industries. The second pick comes in from Sharmila. She's recommending Allahabad Bank. Take a look.
Allahabad Bank was founded in 1865 and is one of the oldest mid-cap PSU banks in the country. The bank's market cap currently stands at 7,367 crore rupees and it gets most of its business from the retail and agricultural sectors. The bank has been clocking in a sustained annual growth of 22% in advances over the last 4 years, well ahead of the industry average of 19%. However, asset quality over the last 2 to 3 quarters has been on the decline as non-performing loans in the fourth quarter grew 25% from last year. To stabilize its asset quality, the bank is expanding its reach in South and West India. It plans to open 250 new branches in FY13 and most of the new branches are expected to be opened in CASA-rich areas. But any deterioration in the overall economic environment could result in lower credit growth for the company. Also, there is a chance that the bank could see a rise in bad loans during the financial year and this could result in higher provisioning and eat into the company's profits.
All right, Allahabad Bank. Do you think that among the banking pack right now, that's the strongest pick that we have available to us?
I think it's a bank from the mid-cap PSU with a very good pedigree. We've seen that even among that, if you had to differentiate, this would be among the banks which investors keep coming back to and which is, kind of protects your the downside more than some of the other banks have. So yes, I think from that perspective, I think Jagannathan will also like the stock because he said he likes banking as a space. Precisely for those reasons, because we are seeing interest rates turn. We will see that concerns on NPA, etc. go down. This is a bank that typically has a good loan book. So I think all things considered, we have a buy on this stock, as I said, with a target for about 196.
The valuations also seem fairly favorable at this point. Jagannathan, you talked about mid-cap PSUs a little earlier on the show. Is this one of the stocks that you were thinking about at the time?
No question about that. I think fears are a little overdone. I think private sector banks, of course, they are a lot more qualitative and a lot more, their loan books are much better, no question about that. But you have to pay 20 PE multiple, whereas you are getting a bank, mid-cap PSU bank at 5 PE multiple.